Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of May 19, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week was still a good week for mortgage bonds. Mortgage rates for Maryland did remain low. If you look at the bond chart on the screen, you can see we had a run up last week in mortgage bonds, which is good for mortgage rates. Thursday, we hit the high not seen since October. Now, we did sell off, but we were able to hit a floor of support on Friday, and mortgage bonds remain at the highs not seen since November 2013. So we're going to recommend that you start the week carefully floating your Maryland mortgage rate to see if mortgage bonds can hold at this support level and bounce off. But if they break below this level of support, we're going to quickly recommend you switch to a locking stance, because every time we've hit this level in the past, we did have a short-term sell-off, which means short-term interest rates could move higher. So carefully floating, but look out, you may have to quickly switch to a locking stance if we break below support. In economic news, we saw that inflation reports came out last week on the wholesale and the consumer level. We had the producer price index, which is the PPI for wholesale inflation, and the consumer price index, the CPI for consumer inflation. So the PPI came in hotter than expected, 0.6% in April 2014, which means year over year we're at 2.1%. Now that's at the high range of where the Feds want inflation. So we're still okay, but if it continues to come in hotter, it may force the Fed's hand to do something which would hurt mortgage bonds. And then the CPI measures consumer inflation came in at 0.3%, and that's up 2% year over year. So again, at the high range, we're going to have to watch inflation, because if it keeps staying hot, then that may force the Fed's hand. That could be bad news for mortgage rates. And then the Commerce Department released retail sales for April 2014, came in disappointing at 0.1%, which is a big drop from 1.5% in March 2014. This is very disappointing, as most economists thought that we're going to get a jump in retail sales now that we came out of that harsh winter weather. So we're going to have to see if the retail sales can rebound in the spring and the summer. If not, that could be a bad sign for the economy. And then Thursday, we saw the week initial jobless claims come out, and they fell to the lowest level since May 2007 at 297,000 claims. That was a drop of 24,000 claims from the previous week, and it was below expectations. So this is some very encouraging news on the labor market. If we can keep the jobless claims below 300,000, that'd be great news for the labor market. But we got to be careful. We got to make sure those claims aren't lower because people stopped looking for work or their benefits ran out. If that's the reason, then that's not really good news, because that means those people are still out of work. So we'll have to keep an eye on that. In housing news, we had housing starts for April 2014 came in at 1.072 million units, which is an increase of 13.2% from March 2014. Now, housing starts are now up 26% for the year, and the number was also better than expected. Remember, housing starts measure the number of new homes that builders have started on construction, in this case for April. We also saw builder permits for April 2014, and they were up as well. They came in at 1.08 million units, and that's up 8% from last month. So very encouraging news from those two reports for new construction heading into the spring and summer markets. Then we had the National Association of Home Builders Housing Market Index for May 2014 came out, and it came out below expectations of 45. We're expecting 49. That's the lowest number in over a year. Now, this number tracks builder sentiment on the market for new home construction. So the number could be coming in lower because the median home prices has risen so much, and builders could be feeling that as the median home price goes up, that's going to put a damper or slow on the housing market. That could be a bad sign for new home construction. So we're going to have to see if this number here is foretelling builders to actually do price reductions to keep the market moving. So I got to keep a lookout for that. And then we had a big announcement from USDA. USDA announced an increase in their turn times to review files for the USDA Rural Housing Loan Commitment. The current turn time is 11 business days, but March 20th, it's changing to 30 business days, a whole month, for them to review a file. So what does that mean for you? That means you got to get a 60-day contract or longer on a USDA home loan in order to close on time. Basically, USDA has gone to that because they're understaffed and they can't keep up with the volume. So you better make darn sure you're working with a lender that can get a clear to close on USDA loan in 30 days, so then you can submit it to USDA and have 30 days to get it processed. So you need 60 days USDA home loans. Now, FHA also had a big announcement. They announced a new program that's going to be coming out later this year. It's a pilot program. It's going to be a 4-year, 2-phase pilot program called Homeowners Armed with Knowledge, or HAWK for short. Now, it's going to offer two benefits. The first one is a 50 basis point reduction in the upfront mortgage insurance premium. It's currently at 1.35%, so that'll drop by 50 basis points. I'm sorry, 175. And then the monthly is going to drop 10 basis points from 1.35 to 1.25. And that's only for first-time home buyers that go through a home buyer counseling program that they're setting up through this. And then there's also loans that remain in good standing will also receive further reductions during the term of their loan to help them. That could mean thousands of dollars saved for home buyers that enroll in this program. So that's coming out later this year. We'll keep you updated. And Primary Residential Mortgage is being considered as one of the pilot lenders for the program, so that we'll keep you updated on that as well. In the local news, the next free first-time homebuyer seminar is this coming Saturday in Towson, Maryland. That's at from 10 a.m. to noon. That's Saturday, May 24th at the Baltimore Sheraton North Hotel right there in Towson, Maryland on Delaney Road. If you'd like to register for that event, give us a call in the office, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Now, if you guys need a quick pre-approval, pre-qual, looking to refinance, purchase, give us a call in the office, 410-412-3319, or you can apply online, www.primaryresidentialmortgage.info. Look forward to seeing you guys next week.